Hey, this is Trader Travis, and I welcome you back to my bear market blueprint case study where I will be personally walking everybody through the bear market, showing you real money and real life trade, showing you how an experienced investor kind of manages the turmoil of a bear market. But first, a quick introduction for those who don't know who I am. My name is Travis Wilkerson. I am the 2019 US Investing Champion for the futures and options division, but I go by Trader Travis online. Now, I am coming alongside my partner of the Options Wealth Academy, Peter. He is the head trainer of the program that used to be called the Success Academy. It was my highest end training program and the most popular. Peter was promoted to head trainer last year, and so now he runs that, and I'm in the background as an on-call trainer. So I'm coming alongside him. He's already walking everybody through each week. He's giving mindset lessons, sharing, hey, here's what he's struggling with. Here's what trades he's making. He's doing case studies showing people how to grow 5 grand to 50 grand. And also for the higher level of the program, he's showing people how to manage 6 and 7 figure accounts. So I am not duplicating, I'm not trying to duplicate what's already taught inside of that program. But what I do want to do is come alongside him and give some free content because I know not everybody's invested in education. Not everybody's fortunate enough to be able to afford the program, which is significant discount this year because we just rebranded it to the Options Wealth Academy. So everybody gets $2,000 off. But still, I know not everybody's fortunate enough to be able to afford it. And so I want to show people real world results. And so if you've watched the very first video, I walk you through the setup of the series of templates or trades or strategies I'm going to profile throughout the bear market. So I'll walk through the setup of those particular trades in the very first video. And then in video two, so if you haven't watched all of them, try to catch up. I keep them, oh, I'll try to keep them short, between 10 to 20 minutes. So far, every video has been clocking in close to 20 minutes. And so if you set time aside each week, you should be able to get through it because my schedule is to release a new piece of content each week. And then in the second video, I pretty much spent most of the time covering the cover call strategy. It is similar to renting out stock shares or renting out rental homes. Another way of looking at it is you can rent out stock shares. A lot of people don't know that. You can bring in income. And so I will update you a tiny bit on that in this video. Mainly, the stock still has not fell. I actually want to buy the stock. I just don't want to buy it. I didn't want to buy it at the higher price where it's trading at right now, about 383. So I'm selling puts around the 370 price level, which is close to what I bought it for initially. That's the price I want to pay. Now, that's the flexibility of the wheel strategy. You can sell whatever put you want, but most people just sell the put that's closest to where the stock is trading at. But since we're in the middle of a bear market, I anticipate the stock may fall a little bit, and I don't want to pay the higher prices and be stuck at that higher price. So I'm just selling slightly below the stock, but the stock has not fell to my price level yet. Now, the downfall of this approach is that if I had just bought the stock when I got called away here, I would have bought it back at about 380 and sold another cover call for about $400. I would have been able to sell two of those so far. So I would have brought in $800 as of now. But because I decided to model the wheel strategy, I only brought in about 400, and so I've limited my income. So that's the downfall of picking this lower price level, is that the stock hasn't fell there yet. My premiums are so small. Now, if I had just bought the stock and sold a cover call, I would have made more, but that's okay. This is what I want to do. Even still, despite my lower premiums here, if you add in my initial stock investment, I don't have any stock shares right now, but if you add in my initial stock investment plus insurance for that, that's a total of 43,000. And what we want to do is take the income. This is instant and guaranteed income I brought in. I click buttons, money shows up in my account. $935 so far in the last 2 weeks. So we take that and we divide it by my initial investment, well, the investment I've made so far. Again, I'm not in stock shares. The only thing I have open is my insurance, but I'm going to use that higher number anyway to show you the percent return, I've earned in the middle of a bear market. So that's 2%, a 2-week return on my investment. So that's on track to be about 4% for the month in the middle of a bear market. A lot of people don't know that this is possible in the middle of a bear market. If you had cash, laying around, you wanted to take advantage of the bear market, you could come in, buy some stock shares. It's in a bear market. I would highly encourage you. Even if we weren't in a bear market, I would highly encourage you to always insure your most. People insure homes, cars. This insurance is relatively cheap. It's cheaper actually than car insurance and home insurance when you run the numbers. So, anyway, I would advise. I never. Well, I won't say never. I would say 90% of the time now I buy my stocks, I always insure them. And people always like, it costs a lot of money. Well, obviously, I'm gonna have a problem. I'm not gonna have a problem paying it back with the income I'm bringing in. But anywho, that's where I'm at now. So I will update you in the next video to see where this is coming along. So later on in this video, what I'm going to do is cover the other strategies down here that I didn't have time to cover in video 2. But before we get to that, let me go ahead and answer a few more questions because I sent out a poll and you still can reply to that. Basically I sent out an email asking people, hey, how can I help you out throughout this bear market? So I'm taking time going through all of them because I've received several responses. So I'm taking time to go through all of them in each of my videos. So I want to answer about 3 right now, and then we will circle back to my trades. All right, so this person here is doing the OSB. So the OSB is a one-stock blueprint. This is taught in the higher levels of the Options Wealth Academy. It's how to manage 6- and 7-figure accounts. It's how I manage my own personal accounts. And so we started with a one-on-one coaching program, and then now it's group coaching where we just walk people through that blueprint. So that's what OSB is. Shows you how to earn multiple streams of income off of one stock. I think we're at up to about 6 streams of income off of one stock. It is amazing. And a lot of people don't know that. Literally one stock, and if you pair it up with options, you can extract 6 different forms of income from that one stock with options. It is the most profitable blueprint I have ever discovered in my 20+ year career. And again, that's taught in the higher levels of the Options Wealth Academy. But anyway, moving on here, this person said they're in a waiting period, waiting for the market to turn around. They use Market Club. They've lost a controlled amount of money, and that's important there because losing money is a part of all successful investing. A lot of people don't realize that. They try to avoid losing money. No, you will lose money, but it should be controlled. You should always have a limit on how much you lose. And with OSB, our limit is around 10%. No matter how far the market falls, if it falls to 50%, because of the way this blueprint is structured, we usually lose around 10%. That's if it's structured, the way it's supposed to be, 80-20 and all that, and you follow all the rules in OSB. Sometimes it's more if people get a little bit more option heavy, they might lose 15, 20, 30%, depends on, how aggressive they are and things like that. But the way the blueprint is traditionally structured, 80-20, 80% buy and hold, 20% options, your risk and your loss is capped at about 10%. Now, what this person wanted to know what strategies I'd recommend. I can't recommend anything because I'm not a licensed financial planner or advisor. I only can make suggestions or show you what I would do. I don't actually try to offset my losses. I accept my losses. They're always acceptable losses. Whenever I try to offset losses, is when it's called revenge trading, and it usually doesn't work out. So I just embrace the losses, and at the end of the day, I make more than I lose. So I actually don't worry about my losses. I don't know about restarting OSB. You shouldn't have never stopped, at least in my opinion. Generally, you can sell cover calls all throughout the bear market. Oh, you know what? Let me show you something. So I want to show you here because when I was coaching clients one-on-one, we'd always run into this issue where they would stop selling cover calls because the premiums got small when the stock fell. And then my term was always, don't be a profit snob. You don't get, as my mentor told me, you don't get rich turning away money. And he's right. You don't get rich turning away money. I don't want to prove it, right? So when we sell those small cover call premiums, $20, $50, a lot of people are like, oh, that's not even worth my time. I'll just wait until the premiums get higher. I always sell mine. I'm like, if I get $20, I'm good. I might even have to go out 4 months for that. I'll take it. Here's why. When you consistently do that over time, it might add maybe 2% to your return, which isn't, people think is not a lot, right? So here it is. $100,000, which is usually the starting amount for the OSB account. We earn 10 years, 20%. Look at it, $619,000. Now, Selling those cheap cover call premiums everybody wants to turn their nose up at adds about another 2%. Let's look at the 619 and let's change that. What does it change to? 730. So those little $50 cover calls everybody's turning away, guess what? I capture those. And so this is how I accumulate more wealth than everyone else. As my mentor said, you don't get rich turning away money. When you turn away a $50 cover call, I want you to look at it as you're turning away $100,000 over a 10-year time period. If you really want to vomit, change this to a 20-year time period and let's see the difference there. So again, 20 years, 20% calculating interest rate is 3.83 million. Now again, we're going to add in an extra 2%. You've consistently, like Buffett, consistency. You've consistently done this for over 20 years. Took those small cover call premiums when the market fell. Look at the difference there. You're giving up several million over a 20-year time period. So that is why I don't stop selling my cover calls. I keep selling them. And then people are like, well, what if I sell them and the market takes off? I could have got more and it shoots past my cover call price. Yeah, I know. That happened to me in the case study all in 2021. And you know what? I still walked away with a 60-something% return on my account. It's because I didn't trade based on emotions and I didn't trade based on fear. I just followed the blueprint. All right, so moving on here. So again, I wouldn't have stopped. So how to manage risk, that's part of the blueprint. So we already have that in the OSB. Let's see, the best way to combine risk with strategy to sort of focus on when the market's being so up and down. Cash and patience are the two strategies. Cash is a strategy and it is a position, and patience. Bear markets are kind of the worst part about bear markets. Somebody said that they wear you out. The sitting and the waiting, that usually what drives people nuts, but that is actually standard during the bear market. I mean, bear market of 2007, 2009, we sat on our hands for like a year and a half, like a year and a half of doing nothing. And you know what? That's what it took to make sure we kept all of our money. So when the market finally bottomed, we had a lot of money to take advantage of it. But another strategy you could use is the bear strategies. If you have Market Club that's satisfied for puts, you could. Peter is working on a template, the credit spread template. You just pretty much switch the template. You reverse the cash flow template, and you could do bearish credit spreads during this market. So just reverse the template. See Peter for help on that. All right, let me move on here because I want to respect your time and I don't want these videos to be too long or else people won't watch them. And this last one ties into everything we've talked about. This is one of our members who I guess hadn't checked in for a while. He said, since taking the course, he's done nothing but grow, has been profitable, coming to you for advice. Once more than 100K is made, where's the safe place to start storing it? Bond, CDs, property? Well, I can't give advice. Again, I'm not licensed. I'm an educator. Well, all these, I mean, it just depends on personal preference. Like, real estate is always great, right? It's created a lot of millionaires. I'm just no good at it, right? It's not my specialty. The stock market is mine. I don't really fool with bonds and CDs just because I just don't fool with them. I can get better returns elsewhere and still keep my money just as safe. But if the 100K is what we use for the OSB, and so if you're part of the Options Wealth Academy, just join 2.0. If you're not, just join Options Wealth Academy and look for 2.0. That's where we show you how to use the one stock blueprint. It starts with about 100K. And again, that's where you earn the 6 multiple streams of income off of one stock. And that is the blueprint I used in 2021 to get let me pull up the Excel to be accurate, wound up growing the account by 65%. Now, can I guarantee you'll get a 65% return? No, but I model it. I showed everybody how to do it. They have the same rules. So I don't see why you whatever I get, you should be close to it. Now, this year, I'm not modeling the one stock blueprint. Peter is. So you would have to use his portfolio to compare yours to his to make sure you're on track. But that's what I do once I got to 100 grand. I use the one stock blueprint where we integrate bond hold. We don't want a 100 grand options portfolio, not unless you have $1 million. If you have $1 million account, bond hold, then yes, a 100 grand options portfolio makes sense. But if you just have 100 grand, there's no way in the world I want all 100K or just have purely on options. That's where you want to start integrating bond hold for safety because you want to make sure you don't lose 100 grand because that can happen when you trade options. All right, let's go ahead and move on here so I can start talking about the rest of these trades here. So this is the put ladder. It's also called the cash machine strategy. It's what my mentor called it, because it literally spits out cash every week, and you can see this here on the Excel. And so it's a bearish strategy traditionally, but I found a way to use it both in bull and bear markets. And so what it involves is buying insurance. So this is the cash machine my mentor talked about. Think of it like a vending machine, right? You buy a vending machine. Let's say I bought a vending machine for $5,600, and we all know vending machines will make money every single month, right? Well, if you do it right. And so this cash machine, this vending machine, allows me to bring in income. I brought in a little over $1,000, but it wasn't for a month. It was actually for about a week, right? So 703 is the income. So again, think of it as a vending machine. If cash machine turns you off, think of it as a vending machine. I brought in $1,003 for the week, the first week of having that vending machine. How much did the vending machine cost me? It only cost me $5,600. I already brought in $1,000 the first week, right? 5630. If I take that 1,000 divided by 5630, so in 1 week I already returned or earned a 17.8% return on my investment in that vending machine, aka cash machine. Now, how long until I recoup my investment? Right? I don't think of it recouping investment. It doesn't matter to me. I'm not trying to recoup my investment. I'm just trying to bring in the income. So I brought in $1,000 in 1 week with only a $5,000 investment. Now you can see for those who join the program, you look at the members area, you see several members. One member in particular, man, it put a big smile on my face. He bought a new truck with his put ladder profits. Now you see why. This was in the middle of a bear market, right? You see how he earned so much money. This was on a small investment. Most of the members have bigger accounts because I'm modeling two accounts, a 16 grand small account and a 100 grand bigger account. And both accounts have brought in significant income during this bear market. Now, that's not taught in the Options Wealth Academy, but it is taught in my Put Ladder course. And so this is the members area for that course. And so this teaches members how to earn guaranteed income. It's another guaranteed income strategy. So it teaches members how to earn guaranteed income. And then a lot of them take that income and then they enroll in the Options Wealth Academy. So if you're interested in that, that's a path I would probably consider, right? Because this brings in guaranteed income. The way we do it, it's a safe strategy. It's a strategy. It's a don't lose money strategy. It's not like a triple your account a year strategy, but it is fairly safe because we buy insurance to protect us. So anyway, most of the members take their profit and then they enroll in other programs like Market Cup Options or the Options Wealth Academy. But anyway, gosh, I lost my train of thought. Rolling. Anyway, so I sold this put here for $300. It decreased in value. And so what you can do is roll it. So you can see here I rolled. Basically, when you roll, you close one trade. So I closed my old trade, and then you sell a new one, right? Usually people roll down, so I would lower the price from like 367 to 350. In this case, I rolled up because the market was going up. But regardless, I was able to bring in more income. And then I just keep adjusting it like this. I just keep adjusting it based on what the market does. Now, just check the time. Again, I want to keep all these videos between 10 to 20 minutes. But I just want to give you an update here on what's going on. This is 1 week later. You know, the management I had on these trades, the Buffett strategy, I'll touch on that last. We just talked about the put ladder. Oh, some bearish cash flow trades. I'll actually talk about these in the last update because these are not closed out yet. So this is a template taught in the Options Wealth Academy. It's just reverse. And so we have a cash flow template and we just reverse the template. So Peter and I traditionally don't do these. We generally don't do these. So we just usually sit out. It's just not. The market is so rare that it goes down. We don't even waste our time selling these bearish credit spreads, so we just sit in cash. However, you can reverse the template and change the bearish credit spreads, and it's in the steps. But Peter and I just don't do it. So don't take our personal preference as like gospel and what you should do. So for the rare times I do it, I'm stepping outside of what I usually do, and I'm selling these bearish cash flow trades just to show people what it looks like following the template in a bearish market. Now, again, these are not closed out. So once these close out, I'll let you know whether I made or lost money. I don't know. It's still up in the air. Lastly, we talked about the Buffett strategy. I won't bore you with those details again. That's covered in the first episode. But I did add one more thing here I will not keep. This is something else I don't usually do. It's called a poor man's cover call or a hedge. I don't usually do it. I know I taught it to members of the Success Academy about a year or two back. I know I have one member who's done that, and he did it in the bear market of 2020. And he was like, oh my gosh, it saved me. So when you buy calls and the market falls, you will lose a lot of money, 50, 60, 70% of your money. But there's a hedge or something you could do called a poor man's covered call. It's like a covered call, except you don't buy stock, right? So this is not the traditional way it's taught, but it is something you could do. And all you do is just sell a call against the call you own, and that brings in income. And as the market falls, this call you sold will dwindle down in value. You buy it back, you keep the profit you made. Now, it's such a great thing in theory, so why doesn't Travis do it? Because it complicates my trading routine and I like simple. Second reason I don't do it is because I've done this before and you have to get the timing right, meaning that the market has to go down. Yes, I feel safer doing it now in a bear market because the market's going down. But when the market goes up, that call you sold will go up with the market. And there are times where you might sell this for $43 and have to buy back for 80. Ouch. You pretty much ate into your profit. You wind up losing money. That's another reason I don't do it. It's just I've done it before and it is ugly when you get your timing wrong. So this is not something I will keep. I'm just showing you that this is something that's possible. If the market goes down for the next week, I'll probably just buy this back for a small gain and leave this alone. I don't need this hedge. Why? Because I already have a hedge. That call option I bought wasn't my money in the first place, right? I don't need the hedge. I already have a hedge. This $4,200 I paid for this call, it wasn't my money. I don't care if I lose it. It was money I received from following the Buffett strategy. And again, that was covered in the part 1 video. So that is it, my friend. I will wrap up this video and I will see you in the next bear market case study video. I will put the links to all of our training programs below. If you're a member of our program, you have any questions, just post them in the members area, and Peter or I will get back to you within 24 to 48 hours. You take care. I hope this is adding some value to your life. I hope this is inspiring you and showing you that you don't have to fear bear markets, right? I ask people how they like me to help them during the bear market, and actually I probably will do part 2.5, right? The next video I may cover some of the responses I received, because one person was talking about mindset. They had never been through a bear market. They wanted to know how veteran traders like me handle bear markets. What are we thinking about and things like that? And I was like, hey, you know what? That's a good point. So I'll probably cover that portion of that in the next video, or maybe add in a bonus video for you. So you take care. See you in the next video. Bye-bye.